This is the Ohio AgNet from the Voice You Know with the News You Trust studio, sponsored by BASF and Veltima Fungicide, the proven #1 for the toughest corn diseases with long-lasting residual, when you need to be confident your fungicide will perform. I'm Ty Higgins. Today we're diving into a topic that's become a much bigger part of the conversation in livestock markets: how producers are thinking about managing risk in an environment of strong prices and ongoing volatility. Austin Robinson is with Farm Credit Mid-America, their livestock product specialist. Austin, for those unfamiliar, what is Livestock Risk Protection, or LRP, and what does it do?
Yeah, so LRP is a subsidized insurance product. It's one of a few that we offer. It's part of the crop insurance basket, right? So if you think of crop insurance as a whole, it's a subsidized risk management product for farmers to help protect bottom lines within their operation, right? But it's really a way for producers. If I'm a cattle producer, I can protect against a falling cattle market. It's a way that producers can go out into the future and set price floors on groups of cattle, specific number of cattle, and really line those floors up for as close as possible when they're going to market those cattle. So it's just a way to protect against falling prices.
You mentioned it's just one of those tools in the basket, right? So where does LRP typically fit in with the broader risk management plan?
Yeah, it's a good question. It really is all over the board. I work with a lot of producers that LRP may be the only risk management plan that they have within their operation, right? Especially the smaller producer customers, or maybe the more diverse operations that are farming both row crop and cattle as well. Then I work with a lot of operations that are using LRP along with futures and options and different strategies, and doing so in a customized version, right? And so there's no one fits all. That's the exciting thing about it, is every operation I step on, every producer I talk to is different. But it has become over the years a very popular product. We've seen a lot of premium dollars flowing into not only utilizing it at Farm Credit, but across the country, right? It's just become it's gotten a lot better over the last 5 years. It's gotten more affordable for producers to use. It's also, there's been a lot of changes that RMA have made to the program to just make it a more attractive program for producers to utilize in terms of protecting risk in their operation.
You brought up those other options: futures, options, livestock gross margin. How is LRP different from those?
Yeah, it's different in a lot of ways. You might hear producers or even folks in the industry compare LRP to, or call it, a subsidized put option. It works in a similar fashion. A put option is a floor or a safety net that a producer can put on the price of the cattle market, let's say. And LRP essentially allows you to do the same thing at a lower cost. There's a lot of differences to LRP and a put option, obviously. But it's different in a lot of ways. We've seen producers utilize LRP over the last couple of years for a variety of reasons. As I mentioned, it's a product that's gotten better, but also in this rising cattle market. I mean, we've seen tremendous price movement over the last couple of years in this bull market rally that we've had, not without volatility, right? There's been a lot of bumps and bruises along the way, but it's benefited those producers that have used it, as opposed to just selling futures. Because if you're selling futures, if you're taking a short position on the market, that market is, as it's moving higher, your position's moving away from you, right? And so they're having to give a lot of money back in the sense of margin calls. Same thing for the producers that have been forward contracting their cattle, right? Those producers that forward contracted cattle 1 year, 2 year, 3 years ago, they've given a lot of upside in this market, right? And so the nice thing about LRP, and why you might hear somebody refer to it as a subsidized put option, is because it allows a producer to protect against that downside volatility, right? They can have that safety net in place. But then as the market moves higher, they're not penalized. They get to take advantage of all of that market upside.
Austin Robinson with Farm Credit Mid-America, their livestock product specialist. Again, the website is fcma.com. Austin, great to visit with you, and thank you for the insights.
Thank you, Ty. It's been fun. Appreciate it.
Let's get a check of the forecast, brought to you by Seed Consultants. Simply better performance. Online at seedconsultants.com. Here's Ryan Martin.
This afternoon, we'll start to see a little bit of action. I think after the sun goes down is when we really can see action get going. Showers and thunderstorms through early tomorrow morning, but winding down after that. Much cooler to finish the week and for the start of the weekend. More rain then on the way for Saturday night into Sunday before drying down for the start of next week. I'm Chief Meteorologist Ryan Martin.
Thank you, Ryan. Today's market analysis brought to you by Louis Dreyfus Company. Excited to bring a brand new soybean crush facility to Upper Sandusky. Learn more about marketing your soybeans with LDC at 574-566 2113. Last week's ethanol production steady at 1.108 million barrels per day, the same as the prior week. Ethanol production through the corn marketing year is running 2% above 24-25 levels. Soybean crush premiums have stabilized in recent sessions and remain in a firmly higher trend through 2026. Soybean oil in particular has shown resilience other than the two sharply lower sessions to close last week's trade. Midday markets on the Ohio AgNet brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. July corn down 2 1/4 at 417 1/4. December 444 1/4 down by 2 1/2. Soybeans for July 3 1/4 to the downside at 1119 3/4. November 1137 a bushel down 1 1/2, and wheat for July down 1 3/4 at 585 3/4. June live cattle is 70 cents higher at 250.80. Lean hogs for June down 32 cents at 92.85, and feeder cattle for September 353.65 up 227. I'm Ty Higgins for the Ohio AgNet.